Good afternoon, Charles Cuddy from Money Tips. Well, the good news at the moment in the UK is that the economy is bouncing back and the numbers of job adverts and job vacancies are definitely on the rise. A record number of jobs have been advertised now, particularly in the building trade, plasterers, decorators, that sort of thing. And that probably reflects the building boom that's going on, not just on big projects like HS2, but you can see all around building is still carrying on here, commercial conversions, people extending their homes, because it is quite expensive to move at the moment, especially with the massive stamp duty we pay and taxes. So a lot of people are just buying a house and then extending it backwards, sideways, upwards. You know, the government have relaxed the rules to allow people to extend their homes and make larger homes from the same property. So that's created a kind of back to work kind of boom, and there's a lot of demand for building workers and plasterers. I do realise that also a lot of people from Europe have gone back home during the pandemic, and many have not returned for whatever reason, and so that has created a bit of a shortage. But however, I mean, I've got tenants from Eastern Europe. They've got no intentions of going home, or if they go home for a while, they come back. I think there are certainly more jobs here in the UK than there are in a place like Romania and Bulgaria, for instance. So they will come back. But, you know, there is, at the moment, it is difficult to get hold of tradesmen, plumbers, just general handymen and electricians and all these tradesmen that you need, roofers. They're all in short supply at the moment, or maybe they're just all very, very busy. But that's all good news that things are on the move. And, you know, you can see when you go out in the streets now, the traffic is back there. I mean, traffic jams are good for the economy. If you see a lot of traffic on the road, to me, that's a sign that there's activity out there. Things are moving. The economy is moving. When it's dead, you know that nothing's going on. You think, where is everybody? You know, so that's what I like to see. Now, the UK economy grew by 4.8% between April and June, according to figures from the Office for National Statistics, the ONS. And they showed the expansion in what they call the gross domestic product, or the GDP, which was partly fueled by retail, restaurants and hotels. Of course, hotels are having a bit of a boom at the moment. Serviced accommodation, Airbnb accommodation have all jacked their prices up to crazy levels. I mean, you just want to rent a house in Devon at the moment, it could be £3,000 or £4,000 a week. So, but perhaps they're making up for lost time last year. But certainly, in all the resorts in the UK, they're all busy and full, and restaurants are busy again. When I go out on the streets now, I see a good number of people out there. Also, tourists in London, perhaps not all from overseas, but certainly tourists from different parts of the country moving around, taking their holidays in the UK. I'm doing the same thing myself this year. It's just not worth all the hassle of travelling abroad and all the tests and the extra money and the hassle. But maybe it's not as much hassle as people think. I don't know. I haven't tried it yet. Education also boosted the economy as schools reopened in the second quarter. However, the figure was slightly below what the Bank of England expected, which was a 5% rebound. Now, it should be remembered that we don't normally get growth figures like this. And last year we had the biggest fall of 10% in the economy. So the economy is still just under 4.5% smaller than it was before the pandemic. So we're playing catch up here. And so these sort of figures of a growth of 4.8% in a quarter is not normal for a mature economy like the UK. It might happen in growing economies and developing economies, but it doesn't normally happen here. And I think we're seeing a similar thing in America, record number of job vacancies. But it should be remembered that we could see a downturn, an increase in unemployment when the furlough scheme comes to an end at the end of next month. And in America also, a lot of their schemes are unwinding as well. Similar job retention schemes are unwinding. So we're going to see a lot of people maybe put out of work or coming off support in America, as it were. And that could, because we don't know if the people who will be, say, let go by their employers when the furlough scheme comes to an end, we don't know if those people will get the jobs that are being advertised. I mean, if you're let go because your retail store is closing down, you can't necessarily go and work as a plasterer on a building site. So we'll have to see how that works out. But things are up on the move. We've come out of the lockdown this year. Many countries I know are still in lockdown and have had this second wave. And some countries in the Far East didn't even have a first real wave, and now they've got this new wave, this new variant, and they're all under lockdown, and some places are under curfew, which we never really had in the UK. It wasn't that severe, but it looks like things are under control here, so that's good news. But there could still be some more problems to come. The government are still spending billions to keep the economy afloat artificially. The stock market is at record highs almost, as is the property market. So how long that will continue, nobody really knows. But when I look at, say, investing in property, there aren't really any properties. It's very hard to find bargains out there, certainly in the London area. And I did publish some figures yesterday on where are the most affordable and the least affordable properties in the UK. Cities like Winchester came out high, St Albans, Bath and Greater London. Places in Northern Ireland were the cheapest or most affordable to buy based on average salaries. So in the highest places, you would need 14 times the average salary in that area to buy a house. That's in Winchester. And it was a bit less in London and Greater London. Obviously, they're taking Greater London as it's a big area, Greater London, 7 million people, runs from one end to another, nearly 20 miles. So it's a big area, but this is not central London. This is not Kensington or Marble Arch or Mayfair, but Greater London. So Winchester, St Albans are higher in the affordability scale when you compare average incomes to the price of the average property. So, but it is difficult to find a bargain for buy-to-let investors where the yields are right, because property prices have risen so much this year across the board, over 10%, on average, according to some figures, maybe 8 or 9% according to other figures, but it's still a big jump. So it's not easy to find bargains, but the market might settle down. I'm seeing some price reductions in London, so we'll have to see how it goes as we come into the autumn and the winter, which is traditionally a quiet time. So we'll see how that goes. Certainly the stock market, every expert says that prices are at a crazy level. The PE ratios are, some companies have got PE ratios in the 50s and 60s and hundreds, and that indicates that the stock is expensive. So the stock markets, the large stock markets are definitely due for a correction in the S&P 500 or the FTSE 100 index. The S&P 500 index is mostly boosted by the FANGs, the high-tech stocks, which again are ludicrously overpriced. I mean, Tesla, how can Tesla's market value be worth more than Toyota and General Motors and Ford? It just doesn't add up, it doesn't make sense. These prices are just crazy. So we are probably due for a correction. To me, this is a time to not go out. I know the government wants you to go out and spend money, but it's also a time to save money, manage your money and look after your money, because we might be in for a long winter ahead when we have to start paying for all of these government spending stimuluses that are going on. That's got to be paid back somehow, probably through higher taxes, and which we've already had hints of. So, I think it's a time to be a bit cautious, manage your money well, look at your investments. And, if you'd like to learn more about investments and managing your money or getting into property, you don't need money to get into property, or you just like to be financially free without working any harder, watch my free video, and I'll put a link up down below. And as a special gift, I'll give you a special tool that will enable you to get immediate control of your finances. So thanks for listening, and have a great weekend, everybody. And thanks for everybody who tunes in on YouTube, Facebook. Really great to see you. Love to hear your comments. And I wish you all a great weekend out there. Stay safe. Bye for now.